concept from the SMC communities. And when I learned about structure, I was totally brainwashed in one direction only. And it takes a lot of time to unlearn these things and to learn the real market structure and how it works. Because market structure is nothing bad. Right now, many people try to bash on market structure. They try to bash the entire time on SMC just because they understand what ICT is, right? Or because they understand what an inducement is. So I just want to tell you the truth about market structure, because it doesn't matter what concepts you want to trade, you will always need market structure. At least you got to understand those levels that they exist and how you can use them. There are some funny ways to read market structure. Like, there are a few guys based on these concepts, they try to always say, all right, exactly there where these traders enter their trade or take their trade when they go long, that's exactly where they don't want to do it. Like, they want to do exactly the opposite. Something like, your stop loss is my entry, right? So that moment when they will lose a trade, these traders want to enter it. So that's kind of the philosophy of market structure. So many people like it, but they also hate it. So what is now the truth, and how can you actually learn it? Basically, it's super, super basic if we are honest. Like a market structure, when you see a market going up, it's nothing than telling you that the market right now, in this kind of context right now that you see, it's bullish. So it's moving up higher. That is what market structure tells you, right? Because otherwise, how can you actually be able to read that? You're not going to map out now some form of inducements, order blocks, or something like that. The only thing that you're looking at is actually, in reality, market structure. So don't try to say that market structure is something bad. The same with this. You will now understand that this is a bearish market because it's moving now lower. And the reason why you're able to say that this is the reality is because price is breaking structure. So what is now the real break of structure? Well, break of structure is just this, right? You see, price is crossing the previous higher highs and it's creating new higher highs. All right. So this is what we call a break of structure. Exactly like this. And because price is not breaking this here, which are the higher lows, right? It's maintaining them. This is why you come to the conclusion that it's a bullish market, right? The opposite thing here, right? Break of structure to the downside in this case. And because this happens, you say that the market is bearish. We break through that. But also here, we are maintaining the top, like the lower highs. All right. So in other words, if price creates a low, a high, here a higher low, and then a new higher high, then we consider the action here that we broke through the high as in higher high. It's that basic, that simple. You can also mark these lows and these highs as points to better visualize it. All right. And now price from here, this is what you can always do, is like you put your line here at the higher low, you put your line at the higher high. And if price now like reacts down lower like this, just make this example, it's moving like this. And now it's not surpassing it. It's actually now moving higher. Oops. It's actually staying above the higher high, therefore creating a new higher high, a higher low, and then creating a new higher high. This is then how a new brick of structure has been formed, exactly at this level that we already mapped out here when the price created this higher high. All right, and then it's creating a new higher low here. And because of this break of structure here, now we know, great, price has moved up higher and it created right now a bullish market. All right, now this story can get repeated now as often as the market wants to do it, right? Until something will happen. So here, another break of structure and another break of structure. Very beautiful. But then here you go with the higher lows the entire time. Here the term for it is HL. L, and here higher high, higher high. Great. Now what happens? Price from here goes lower and actually breaks through this higher low, creating a lower low in this case. Coming up higher, creating a lower high, a new lower low, lower high, lower low. So that means now this was a reversal here. This is a break of structure to the downside, which means price is now ready to go lower. Break of structure, break of structure. And now you are creating a bearish market. All right, this was a higher high, but this is now a lower high. And this is, this is a lower high, lower high. And these things here are lower lows, lower lows. All right, and this one here as well. Lower lows, all right, because the new low is lower than the previous low. That's why you call it lower low. And these ones you call it lower high because they're lower than the previous high, lower high, right? Very basic. Great. And then now, don't want you confused now or something, but it's also crossing these then, right? The previous higher lows, right? Many people will then use this as some form of confirmations or whatsoever. I will tell you later on how we're going to use it and so on. But right now, just for the purpose of the video and to understand the very basics of market structure, this is actually how market structure works, right? You have a bullish market, then you have a bearish market, and so on. Then from here, it can again break structure, create a new bullish structure, and so on. And the idea is why you want to know why these things happen is just because you want to follow exactly those trends, right? This is what we call a trend, right? This is a bullish trend, this is a bearish trend, this is a bullish trend, all right? And now you see already the multiple time frames, right? Because if you see a market like this, right, this is going to be now on a higher time frame level, individual trends. So for instance, from this low till this high, it's one bullish leg. This is a bearish leg followed by a new bullish leg. So you have an overall uptrend. So you see here, this is then the break of structure on the higher time frame, right? This is a break of structure on the higher time frame, and so on. And this entire thing can get repeated now. You see now it's coming lower like this, right? And so on. And this is gonna be then how multiple time frame work. All right, so you got these. This is the anatomy of structure. This is how market structure truly works. All right, you got all of these things. That's exactly what you want to do for. And now, right, if you see this, now you can put another line from here till here. And this is going to be now an even bigger time frame. And this is how you can repeat it now for all time frames that we want to use. You can see now here on the top the time frames that I use. I use the monthly, I use the weekly, I use the daily, I use the 4 hour, the 1 hour, optional for me 30 minute, 50 minute, and 5 minutes, like these 3 time frames, or till the 3rd minute I don't really use, and then the M1, and these other things I also don't use. But you see, based on this bigger time frame to the lower time frame, so from the monthly to the 1 minute, you can build up this kind of story. And this will help you to further understand how the dynamic of the market works. All right? Great. The thing is also, what you gotta understand is that the market will never look exactly like this in reality. This is just something that we wish for. We wish that the market will look something like this, because then it's gonna be very easy. Because the idea is, as I just mentioned, if you see a break of structure to the upside, you're looking to buy, right? Because you know now price is more than likely to follow, right? Break of structure, break of structure, break of structure. At some point, it's just gonna not work out anymore. At some point, price is actually gonna start reversing, which means like this, for instance, right? It's pushing up higher, but then it fails to break up higher, and it's actually gonna break through these lows, and then lower and lower and lower and lower like this, and then back higher and higher and higher and higher and higher, and then lower, 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 right? It would be very easy, because then you don't even need to understand much about the markets. Everyone would just buy when they see these higher highs, and then we sell when we see those lower lows, right? It's quite simple. Then, all right, you've been looking to sell, but then price breaks through it, you would hit a stop loss or something, and then you would buy again afterwards because you will see the new trend, and so on. Here you see you have a bullish market, right? And then you see how you break even something on the higher time frame in this case. The cool thing, and what you can also add to this type of analysis, is a trend line, right? Because that's how a trend line works. Most of these retail concepts work like this. They see this trend line, right? And they are like, all right, the market is going to protect them. The moment when price is going to trade through that trend line, aka a break of trend line, it's going to also overlay very often with a form of break of structure, like in this case, right? So you have like double confirmation. That's how they call it. And then it's going lower, pull back, lower, pull back, lower, right? So you see now, also now to understand more about how market moves and how you can call these names, the movement from here till here is called an expansion, right? Expansion. Expansion means price is moving aggressively in one direction. It's also the same meaning, like it's moving in the right direction, right? Expansion, all right, expansion. And then, or you can also call this a distribution. Expansion, distribution. This movement to the downside is called a retracement, right? Retracement, or you can also call it pullback. Followed by an expansion, distribution, followed by retracement, pullback. Expansion, distribution, retracement, pullback. Okay? So the movements to the upside are the expansions and the distributions. The smaller line are the retracements and the pullbacks. Then again, expansion, pullback, expansion, distribution, retracement, pullback, and so on. Until the price is actually gonna change the trend, right? Trend reversal is also what people call it. And that is called a reversal. We call it simply reversal. Trend change, reversal, right? Then again here, this is also reversal because now from a bearish market, bullish market. Then at the top again, a reversal, right? And we also understand expansion, 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 then expansion, right? This is the reversal, but it's also an expansion, right? A reversal is also an expansion because it's moving aggressively in that one direction, but it's in reversal. Pullback or retracement, expansion. Pullback, retracement, expansion or distribution, all right? So you now know these fancy names and terms because it's important to understand it. Also super important is to understand about market structure. It's, like I said, only in theory, right? It looks like this. And the real market is gonna look something like this, right? Something like this, and like this, like this, like this, like this. And it's gonna look very confusing sometimes because it's not only gonna move beautifully like this. The idea of the market structure then in this case is now not to come and to say, all right, break structure here, 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 then reversal, bearish, bullish, whatsoever. No, the idea is actually to come over and say, hey, from here, till here, till here, till here, till here, to make it look like in this theory that I just explained to you. This is the idea. This is the secret to market structure, to make it look like it is in the theory. I know it's not always going to be like this, but the idea is to make it look like it. And that is going to be beneficial for you because that's all you need in reality. Just make it look like it. Great. And now that you know this kind of thing, we will also go over the problem of market structure. Because, as I already said, market structure will not always look like this, right? And the biggest problem is, and this is why market structure alone will not help you to understand the market or how market moves or how market works. It's actually gonna confuse many of you because if you want to follow it the way and how I said it, right? Like, oh, break of structure to the upside, so I need to buy, break of structure of the downside, I need to sell, and if we buy above it again, and so on. This is not how you're gonna be profitable in the market. You're gonna actually lose most of the trades because the principle of the market is a little bit different, right? And I will show you now the biggest problem. The biggest problem is, in reality, that the market will do things like this. Will go up, right? Like here, break of structure, right? And now you will say, all right, I'm looking to buy. And what will happen is it's gonna create, for instance, like this. So don't want to confuse you now here. But it's creating those trends to the downside, right? Like this. And now coming lower, break of structure, right? And then break of structure on the opposite side, and then continue to move like this. So it's in reality here, breaking something will look like a break of structure to the downside, but will be followed by a break of structure to the upside. And will create now, out of a sudden, a bullish market. So first, overall bullish, right? Then starting to be bearish, but overall it's bullish. And then it's gonna drop lower, then break structure back up. Now, how could you actually understand it the right way here? It's important to know how to zoom in and how to zoom out in market structure. It's not just by having a look, oh, okay, it's bullish, I follow this bullish movement. People also call this, right, if the market moves like this, they call it a bullish leg. And because this bullish leg exists, they are focused that the price is gonna actually respect the higher low and it's gonna create a new higher high. But the reality looks different, right? And you gotta accept that it's not always gonna be like this. It's gonna actually move lower like this, right? And it can even, right, can even surpass this low and then go up higher. But it doesn't need to happen, right? It can also stay inside like this, right? Stay inside of this. Just coming till here. It can even till it taps like this, it's fine, right? It should just not go below it. The moment when it goes just a small dip below it, it's already, you can classify it as a potential break of structure, and therefore it could be a potential reversal, right? But it doesn't need to, right? It doesn't matter. Both scenarios exist. Exists the scenario when this happens. I mean, we have it here. Or when it happens like this, when it's going to respect it, right? You gotta actually use the other concepts. That is the idea. This is the problem of market structure. It's not gonna help you everywhere. You gotta use simply different things in order to get the answer why this might happen. All right? Then what else problems we got? We got more than just that problem. This is what I explained now can happen, right? Like you have this, you're in this bullish thing, and now you will say, okay, but I'm smart. I see this break of structure, so I'm selling the market. All right, but what are you gonna do now? It's breaking up, and then it's breaking down. Breaking up, and then again breaking down. Breaking up 2 times. One more time, and then again back down. This is how market will look most of the times. These things that I just showed you are just the theories, but look at this. How many market structure breaks you will not get. So you see, the more details we have, the more difficult it's gonna get everything. Because you got everywhere break of structure. Back and forth. Break of structure, break of structure. And that is exactly the difficulty of market structure. And this is why now, market structure will not help you anymore. Market structure is gonna confuse you. Because if you wanna always try to identify the reversal or the expansion or the pullback based on market structure, you're gonna be very fast lost. Because that is actually your task as a trader. Because you wanna trade reversals. You wanna know when the market is gonna reverse. So you know, all right, the price is not gonna remain bullish anymore. It's gonna be bearish. So I have now to pick the side. I gotta switch the side from the bullish market to the bearish market. But also, if you are in a bullish market and you wanna trade this movement to the upside, you have to understand where your expansion in your distribution is and where your pullback will end, and from where it's gonna then actually make this continuation, right? It's a continuation of the trend. You want to know where these levels are. So also here, you gotta understand these levels. This is why you need market structure. Market structure in reality is just here for you to be able to identify all of these levels, that they exist, the way and how they exist. This is the only reason. And then also for the purpose of learning things, right? Like now, let's say it's respecting this, and now from here it's gonna go up. Doesn't matter how it's doing it. And now it runs here till this, right? It's respecting this. You will now be able to see that there is only one reversal, right? The reversal is here. This is the real reversal. This is where it exists. This is what you need right? The reversal is what you need. This is what you got to search for. And then you will also be able to understand which lows got respected. This got respected, respected. These ones have not got respected. This is respected. These ones have not been respected. But this one. So you will be able, after you've seen the movement, to see where price respected it. And that is, in terms of the market structure concept, how you will be only able to visualize it after it happened. While it's in the creation, you have to use other tools for help. This is what I'm going to introduce you now in the next part of the videos specifically. All right? Now you've seen this here in the theory. We will also go now over some practice examples so you can better see this. And now with this video, I just wanted to explain you what market structure in reality is, how market structure works, how you should be able to read it, because now your task, as I mentioned, is you have to put it in a perfect way. This is the perfect way, right? On the higher time frame. But there's also always a perfect way for the lower time frame, like here in this case. And that will be here. You can put it like this, like this, like this, like this, like this, like this, like this. Right? This would be the perfect way. Because now, if you would look at the red line, you would say it's a bullish structure. This is the idea. This is your target of market structure. You want to identify, is it bullish or is it bearish? Right? And now that if you only look on the red line, everyone would say, yeah, it's bullish because broke structure, it broke structure here, it broke structure here, broke structure here, broke structure here, right? Here, these are some smaller things, but the higher lows got respected. Therefore, it's fine. So it's moving higher and higher and higher and higher. That is the idea of a bullish market, right? But if you would now come here and say, okay, wait a little bit, let's have a look at the market with all these red lines, you would say, okay, bullish, 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 right? Bullish, and then bearish, bearish, but then again, it's bullish, bullish, then again, bearish, bearish, bullish. So you would change too often your perspective if it's bullish or bearish. But you want to see in this context here, you want to see only the real direction. And the real direction is then from this high till this low, it's bearish. Here you have one reversal, and then from this low till this high, you have it bullish. That is your task with market structure. And then we're going to use all the other concepts to further understand how to be able to understand that these things here are at the end just a form of manipulation. Hope you enjoyed this video, guys.